Gents, I hope you're good. I trust that you're all good. Happy Sunday. I got good news. I have good news, gents. Ke na le taba tse monate. Taba tse tibileng tse hlwahlwa. Okay, dollar index. Wa bona ntse ke shebile, but I have good news, eh? Let me tilt the screen. But now before I tilt the screen, actually on this video I want us to review week 6 of 52, but on this pair, Australian versus Canadian dollar. Same setup as the Japanese, but a little different, little tweaks. Hint: Monday's candle, guys. So for now, that's the hint. So I just want to take you through the strategy review of the week. So what transpired during the past week on this chart. So without wasting any further time, let me just go down to the 5 minute time frame and try to delete this Fibonacci's, and delete these Fibonacci's just to make the chart a little bit clearer. Yeah. So he gents, you see here it says momentum push. Now my momentum push is like from that high to this low, and this low is Tuesday, right? How do I count these candles, or how can I tell this is Tuesday? I look at the volumes here at the bottom. Let me check if my screen is bright enough. Oh, sorry, it was not that bright. Now it's bright. Okay, here at the bottom there are volumes. You see where there's a gap. The gap is Sunday. Trading View platform doesn't show this. It combines Monday as well as Sunday. Sunday and Monday is just one candle, but here on the MetaTrader platform it's different. So this candle is when the market opened Sunday, I think. Yeah, but this is Monday candle. As you can see, Sunday there's no volume. Only trade Monday to Friday, guys. That's what I say, Monday to Friday. So I can tell that here is this candle is Monday. This candle has no volume. Let me just remove a bit. This candle has no volume, so I won't count it in the momentum push. I'm not excluding it in the momentum push. It has no volume. It was, I don't know what to call it. So from this high to that low, Tuesday's low, this week's low is the momentum push, right? Right. So let's see. If this was Tuesday, this is Monday, then this is Friday. This was Thursday. So Thursday's high, there was the weekly high, to this week's Tuesday low. That is the momentum push. So this is the first thing that we're looking for when we on the daily chart. Number one, momentum push. We look for the momentum push. Write it down. That's the first thing. Second thing, we look for a 50% retracement of this momentum push. 50% retracement happens after, as you can see, the market made a low on Tuesday, pushed up away from that low, again made a candle on Thursday. This Thursday's candle, I call it a respect candle, and I should see some rejection on the 50% retracement of the momentum push. So this is the 50%. That's the second thing that I'm looking for. The second thing is respect on the 50%. You see that wick means rejection, guys. That wick means rejection. That's the second thing I'll be looking for. Retracement and respect. So now the third thing is the hint that I was talking about when I said Monday. Monday's candle, this big purple candle. Monday candle, I want to talk about Monday. It's very significant because we are actually trading a weekly candle. I want you guys to look at my left, at the left here. Né? When I press like this, when I tap on the screen, time frames appear on the left. On the right are some other things. I just want you to focus on the left. 5 minute time frame, 1 hour time frame, daily time frame, monthly time frame. I do not have the weekly time frame. Be aware that I do not have the weekly time frame. But be aware also that we are actually trading the weekly time frame. I am actually trading the weekly time frame. This strategy that I'm using, I'm not scalping, I'm actually swing trading. This is called swing trading, so I expect the market to still push to this level. So we'll see what transpires over next week. As now we are backtesting what transpired over the past week. So where was I? On the third part. Second part we are done is the 50% retracement and rejection respect of the 50%. So the third thing we'll be looking for is Monday's candle. Monday's candle is so significant in a way that here is part of the body of the momentum push, because here the momentum push ends on Tuesday slow. The momentum push ends on Tuesday, doesn't end on Monday, is part of the body of the momentum. So when Monday is part of the body, expect the market to retrace maybe about half of the candle, here. Maybe let me say the premium and discount levels. Maybe let's say the premium, the market should retrace, or maybe should remain in the discount areas of this Monday candle. The discount areas meaning that there's two halves. Let's take, for example, let me just explain the premium and discount values. For example, take this line. Take this line as the divider. Here, on the above the line are premium values. Below the line are discount values. So that's the same concept that I'm using only on this candle, not on the push. The push is fine. The push is fine and it's fine, but I want us to notice or to be mindful and aware of Monday's candle, guys. It's important. So in this case, it's part of the momentum. The body is part of the momentum. That's the third thing. So I'll expect the market to retrace in the discount values of the Monday's candle. So fine. In the case where it is the body, in the case where maybe the momentum push ends on Monday, it does end on Monday, then I'll expect the market to actually retrace the highs of Monday before going down. So yeah, that's what I wanted to say or be mindful of every time. So I'm done. Those are the three things that I'm looking for on the daily time frame. So I'm done on the daily time frame. Yeah, there might be four, there might be three. I might have combined the fourth one with the third one, because at first I thought it was three. So here at the back, I just have to delete this clouding space. Yeah. So fine. So now I'm done on the daily time frame, right? Done on the daily time frame. Fine. So what I want to do right now is go through this thought process again, but now on the trading view platform, not here. Yes, there's a shortcut here at the bottom, so we definitely went in. So now I'm going to repeat the same process here, because here I can write notes. On that platform I cannot write notes. Oh god, the market is not open. So for now, guys, I think It has to. I have to wait for the market to open on Monday for this thing to load. This is why I kind of don't like this platform. This is why. So for now, I'm just going to complete this thought process of how I was going about this trade. Because if I can show you my trade history, uh, this is not the demo. I'll show you trade history in my demo account. Actually, let me just jump to it. This is the demo account. So uh, let me switch on the trade history on. Yes, those arrows, as you can see, those arrows, where those arrows are, that's where I entered and that's where I exited to profit. So that's what I want to show you guys. So for now, I'm going to switch it off and begin with the thought process again, but on a lower time frame. On a lower time frame, so 1 hour after the daily. So we check our time frames here on the left. After the monthly is the daily we are done. I told you the three things that I'm looking for on the daily chart. There might be four, there might be three. Yeah, at first I counted four, but now it's just three. And as I think I mentioned everything that I want to see on the daily time frame: momentum push, retracement, rejection, respect candle, same thing. So I'll respect on the next day. Oh yeah, I forgot to mention that when Wednesday touches, I don't actually trade on Wednesday. I know that Wednesday retraced, but I don't trade on Wednesday. I trade on the following day. On the following day, which is Thursday. This is Wednesday, the following day is Thursday. So I should be doing something on Thursday. And also I want to be aware of the power of three. Since now I'm going down to a lower time frame, let me delete this arrow. I'll do it again on the 1 hour. Now I'm on the 1 hour. First thing I want to look at is the created liquidity created by this touch, by Wednesday's touch. Okay, Wednesday touch, it actually reversed on the 50% line. As you can see here, I have maybe a dark horizontal line, so that's where I drew my liquidity line. So this on the further left, I call it auto block, but I call it's an auto block, but I call it my potential build up. So if the market would have maybe swept this liquidity or this accumulation area, didn't actually manipulate right, swept away and above this line, then I would have then my setup would have failed in a way that I should change my sentiment. My sentiment will now be up or long instead of going short. So here is my potential build up, but I also want to say it is my auto block here. So yeah, auto block liquidity created from this liquidity, guys. Now remember from our first start. I just want to zoom in here from the first strategy that we were going about. Because let me just put this Fibonacci aside for a moment. Because the market touched the 50% retracement line and kind of respected it, we finding the clue on we find the clue on our RSI, as the RSI was on overbought levels and now reached oversold levels. For that reason, you know guys, that for that reason I was supposed to go for this Fibonacci retracement, right? So that starts there to here, right? Because we touched and we touched the our resistance level that we want, and we kind of respected it with this change of momentum and direction. So I would have expected the market to actually retrace these levels, 50% retracement on the 1 hour time frame, or the 79% retracement line on the 1 hour time frame. So the market did come back up on this liquidity line, but it didn't actually respect this strategy, guys. That's why now I'm going for the strategy of liquidity sweep. That's why now I'm going for the strategy of liquidity sweep, because now this, when I know the market is reaching overbought levels over here, I w- that gives me a clue that that's where my liquidity starts, my liquidity accumulation is. That's where my liquidity accumulation is. On the same day, Wednesday touch on the 1 hour, I know that's where my liquidity starts. So this Fibonacci retracement on the 1 hour, it doesn't work anymore. Fibonacci, I only use it on the daily and the 5 minute time frame. Daily and five on the 1 hour, it doesn't work. What works on the 1 hour time frame is my power of three: accumulation, manipulation, and distribution. You remember that, guys? But now I'm viewing it with the concept of liquidity sweep. I'm looking at with the, as you can see here, there's accumulation of liquidity accumulation over here. It made equal highs and equal lows. Here equal. You could say equal. You could say here at the bottom we are equal. Equal touch. You see, that was the distribution since we sweep that side, right? Since we are looking for sales, and since we are sentimentally short, going short with the market. So that is my thought process, guys. Wednesday touched. As you can see, Thursday I was supposed to be doing something in the market, but the market decided to accumulate for the whole day. It accumulated for the whole day. Here, after the pink vertical line, is Friday. Here is Friday. So let me just go up to the daily time frame. This is the area that I'm working with. Okay, Monday, Tuesday, Wednesday, Thursday. You see this gray line. Friday is the pink line. Today is Sunday. You see the market is not moving. It's Sunday, like the market is closed. Wait for Monday, guys, and we are in Tuesdays. I know at first I was saying that Mondays and Thursdays are signal candles, right? Do you remember me saying that? But now Thursdays are also trading days, so now I'm going to change the narrative of Thursday. Only Thursday. Monday is a signal, guys. As you know, as you were listening to me when I started this video, or when I started talking about Monday. Monday is significant, it's a signal day. Thursday, I'll take it out of the signal day because some reversals do happen on Thursday. They're called midweek reversals. So from Tuesday to Friday, we're trading. We're looking for opportunities or this kind of a setup, guys. So going back to the 1 hour time frame, since we've counted the days, now I'm here. Thank you, Manu. Thank you, Malume. Owe. Paka wenze njani? Okay. Uh Thursday. This is the whole of Thursday. It decided to accumulate. Right? So Friday, this big candle is NFP news. So NFP news decided to favor this market, or the short side of this market. Let me just say that. So yeah, the whole of Thursday I accumulated. So on Friday, it decided to manipulate. So I was looking for divergence and I didn't get it. I didn't get divergence. That was the most disappointing part of it. But I still went through with the strategy. As you can see, the market here at the bottom on the RSI It didn't divert. It was supposed to be like this, going down to signal a change of momentum, but it didn't. So on the second leg of the M formation, that's where I want to look for opportunities. So for here, golden time, it's time to trade. So this is my whole thought process. Liquidity sweep. Here it was the sweep high. So this is where my golden zone would have been on the second touch of the M formation on the divergence. This is the first touch, one. This is one, guys. You see one, two. On the second touch, this is where I start now penny king. Start shaking. Now I have to trade. So after this yellow line, I have to look for the setup on the 5 minute time frame, the repeat of the strategy. As I was saying, I don't draw the Fibonacci on the 1 hour time frame. I only draw it on the daily on and the 5 minutes. So now I'm going to delete and go to the 5 minute time frame, guys. So I hope you are listening and you can hear my thought process as I go through it. So now we are on the 5 minute, as you can see. 5 minute as well. I want divergence. 5 minute as well. I want divergence. I'm not getting any divergence, guys. I'm not getting any divergence. I'm not getting any divergence. I'm not getting any divergence. Okay, fine. But now I'm not getting any divergence. But look at this. Look at what the RSI is telling me. Overbought levels to oversold levels. This is what enables me to draw my Fibonacci. This is what enables me to draw my Fibonacci on the 1 hour time. Everywhere I have to look at this, but I don't do this on the 1 hour time frame. 1 hour time frame is the power of three or liquidity sweep. So now I'm on the 5 minute time frame from here to there. Where is it? There is it. So from there to here. So from there, I would like to see a retracement of 50% or 9.79.0. 50% or 79%. I bet you on the 1 minute time frame. I don't have the 1 minute time frame. I don't use the 1 minute time frame. I'm comfortable with only these four time frames. But I am 100% sure here on the 1 minute time frame there was divergence, and as you can see, we are getting rejection candles, rejection one, rejection candle two. That's isn't that the much? Even if I've put my order here, my stop order here, it still would have went down and executed my order. But here I just want you to show you where. Okay, let me where I was supposed to actually put it in my trade. I think here I was late, but I trusted the market would go down. I was late. So here, rejection candle, rejection candle. Let's see, I put maybe my order here, my stop order would have been here or there maybe. Let's just take this one over here, put it up there. Our risk 70 points. Risk 70 points. So let's see. Let's zoom out. The market shake and shut down. Ooh, this was NFP. Actually, looking at the chart, Australian dollar versus Canadian dollar, the unemployment rate news of Canadian dollar, they were also released. So I think it's not NFP. Actually, it could be both NFP and unemployment rate of the Canadian dollar. This is why, but at the end of the day, it favored our psychology, it favored our sentiment of the market going short. So that is the end, guys. This is where I would have placed my entry here. So now I just want to delete this error and delete this Fibonacci. Switch on my trade history. switch on the trade history, and this is what happened. I had like 2 orders. I put in an order there, continued, no, it didn't continue, put in an order there. So it's very dangerous, guys, to be late in the market. You see now, being late in the market, I don't want to be late in the market. I want us to be as early as I'm practicing right now. I want my order to be there. I don't want my order to be here. I want it to be there. Because now, if it's here and I'm going for 70 points, obviously I'm going to get stopped out. As now you see now on it's ranging after that. Let's go 70 points. I put there. Sweet. Let me just zoom. Yeah. This arrow. Yeah. Here's my order. I go in. The market is ranging, and now I'm like the spread. Obviously, the spread would have stopped me out here. The spread would have stopped me out here with my stop loss being here, with the spread, with the market coming up here. Like, I need to be as early as possible. I need to be as early as possible, as early as fuck. So I don't trade news. Basically, I don't trade news. Basically, I don't trade news. But I have to be careful of news. I think I have to be careful of news. Maybe be patient, because the news did spike up. Maybe came back to that order. Still went down, went further down. So that's where I ended the trade. Just below 1:5, and we'll see. We'll see again next week, guys. So this is the video that actually this on this video I backtested the strategy, backtested what happened during week 6 of 52 in 2025. So guys, I strongly advise that you do the same thing. This is Australian dollar versus Canadian dollar. I strongly advise that you do the same thing. Look here at the bottom. Let's check at the bottom. Here was on the 30th of January, this Thursday. So the momentum push started last month, January, on the 30th, and ended this month, February, on the 4th of February. That's when the momentum push ended, and we still had to wait for the 5th on Wednesday to come and respect this candle. We still had to wait because Thursday didn't do anything. Nothing, it just accumulated. Come Friday, the 7th of February, that's when the market started pushing. So we have to be patient, guys. We have to be disciplined. And when the time comes, we have to be fearless. We have to be audacious. We have to be audacious. What else, guys? This is the liquidityStrider strategy. We have to believe in the strategy. We never waver from this plan, guys. Once we go and jump into the market and lose, why are we losing? Because we wavered. We wavered from the plan. That's all I want to say, guys. This is the liquidityStrider strategy. Dumela mama le kae? Batho ba feta ene ba disturb ka record gents. liquidityStrider strategy, guys. SBFX, guys. Ke dilo tse ding lo ngkhale ke di pusha ba fethu. Khona ke di perfectang no gents. So no yang disappointer. Trading view ntlo ngwala fatshe, but now I think we'll wait for tomorrow and re tla ngwala fatshe strategy kaofela, then Ramonat. I think after the 15th, guys, after the 15th, whoever wants to or whoever is feeling himself, because now I am feeling myself even after those losses, guys. Even after those losses, so let me just go back. Even after those losses, guys, I'm gonna go back into this like this with this strategy. But what's very disappointing is the divergence side of it. The divergence side of it. Oh, I forgot. I almost forgot actually. Thank God I remembered. Okay, before I move on, the divergence. There's no divergence, guys. A loss of momentum on the RSI, so it's fine. I'll just change here. Go to our first review of the strategy, which is the chef. Interesting what happened here. The market continued down, guys. The market continued from last week. Remember last week I showed you what was the Swiss franc and the Japanese yen doing. So this week it continued. However, I want to mention Monday, then close this video. Remember, on Australian dollar versus Canadian dollar, the Monday was part of the body, but here Monday is not part of the body. It's actually the end of the extension of the momentum push. You see, momentum push where it ends. This is Monday. So here we're not going to retrace on the discount values of Monday's candles, but the premium values of Monday's candle, which is the weekly reversal, guys. Weekly high Monday. This is Monday weekly high, and it continued and it pushed hard. I didn't trade because I didn't trade this chart because like I actually I didn't trade this chart. I didn't post anything on the group because I wanted silence. I wanted to see, am I kidding myself? Turns out what happened last week repeated here. So this strategy, guys, is valid. It's validated. It's validated, and this is a video about it. So I just want to show you something. Maybe I still have maybe I should have, I must have did this. Actually, I want screenshots. Oh my god, screenshots. Yeah, good. As you can see, this is Australian dollar versus the Canadian dollar. This was before, guys. This was before. You see, I was screenshotting. So this strategy screenshotting, as you can see, setup going. I was just quiet, guys, quiet. So, oh yeah, I have divergence. I forgot. I almost forgot. You see, it's good to review. It's good to keep reviewing. Where am I? Yeah. What is it doing now? And actually, it has to be here. Yeah. So Australian Australian dollar ne correlates. Remember correlation, guys. Australian dollar correlates with the New Zealand versus the Canadian dollar. Same thing happened here. Let me just show you. Go to the 1 hour time frame. But what is interesting here, I got the divergence. What's interesting here is that I found divergence. Look at this trend line and look at the trend line on the RSI. There is divergence. They are pointing in two different directions, not in the same direction. So here I got divergence, guys. And let's see. Uh, yes, I did trade. You see, here's the trade history. Here's kind of perfect. Here's a kind of perfect setup. So it's a 1:7, guys. 1:7, just below the 5. 1:7. So we'll take profit. So yeah, this is where I'm going to end the video, guys. Just to show you that now we have a clear, defined plan, strategy. We killing. We killing. Which actually we're not killing, guys. We are going to kill, but I'm manifesting, guys. The way you speak is a spell of what you want to see in reality, guys. So when I say I'm killing, I'm actually killing. So yeah, from that, let's see how much we made from that trade history orders. It won't show. Yeah, today or not today. Last week we made losses, guys, because on some it doesn't, like, the strategy doesn't behave, or doesn't, it fails. So, and now I know when it fails what to do. So that part, I think I've addressed how to be flexible. My flexibility is being addressed by this strategy. So if the strategy fails on a market, I know that I'm supposed to look for opportunities in a different direction. Also, being mindful of Monday's candle, because we are trading the weekly candle. So yeah, I just want to end the video here. So tomorrow I'll be doing notes.